Let me start with a situation that might feel uncomfortably familiar. You open your investing app. You've finally decided to do the right thing. You've got some money saved, but the market is down. And instead of feeling excited, you feel frozen. Because what if you invest now and it drops more? What if you wait and it goes up without you? What if you mess this up and prove, once again, that money is just something you're bad at? So you do nothing. Weeks pass. Months pass. Inflation keeps eating your cash. And that feeling of financial vulnerability never really goes away. If that's you, don't feel embarrassed. Because here's the thing. This isn't a discipline problem. It's a psychology problem. Welcome to Women's Invest. I spend way too much time thinking about how women can build wealth without the overwhelm or fear. If you're someone who works hard but still feels financially vulnerable, hit subscribe and give this video a thumbs up. Now look. Today we're talking about dollar cost averaging. And I know, that already sounds boring, technical, and like something finance bros casually mention on podcasts. But stay with me. Because dollar cost averaging isn't just an investing strategy. It's a way to outsmart your own fear. And once you really understand it, investing stops feeling like gambling and starts feeling like control. Here's what most people don't realize. The biggest enemy of your money isn't low income. It's not lack of intelligence. It's not even bad investments. It's timing anxiety. According to data from Dalbar, the average investor underperforms the market by several percentage points every single year, not because the market is rigged, but because people buy when they feel safe and sell when they feel scared. And women feel this even more intensely. Multiple studies, including research published by Fidelity, show that women are actually better investors than men over the long term, but they invest less, stay in cash longer, and delay starting because they want to avoid mistakes. That hesitation alone can cost hundreds of thousands of dollars over a lifetime. This is where dollar cost averaging comes in. Now you might be thinking, okay, but what is dollar cost averaging really? In simple terms, dollar cost averaging means you invest a fixed amount of money on a regular schedule, no matter what the market is doing. Every month, every paycheck, automatically, same amount, same day, no drama. Let me give you a concrete example. Imagine you invest $300 every month into a broad market index fund. Some months, the market is up. Your $300 buys fewer shares. Some months, the market is down. Your $300 buys more shares. Over time, your average purchase price smooths out. You're not trying to be smart. You're not trying to predict crashes. You're not waiting for the perfect moment. You're letting time do the work. This is where it gets interesting. Dollar cost averaging isn't about maximizing returns in theory. It's about maximizing returns in real life, with real emotions, real stress, and real bills. Because mathematically, yes, lump sum investing often wins on paper. But psychologically, most people can't handle it. Now look. Let's say you invest $12,000 all at once. The market drops 20% the next month. On paper, that's temporary. In reality, most people panic, regret the decision, and sell. Dollar cost averaging removes that pressure entirely. It turns investing from a decision into a habit. And habits are powerful. Think about brushing your teeth. You don't wake up and analyze whether today is a good day to brush. You just do it. Dollar cost averaging works the same way for your money. Here's a statistic that should honestly make you uncomfortable. If a woman invests $300 a month starting at age 25 and earns an average 8% return, she'll have roughly $880,000 by retirement. If she waits just 10 years to age 35, that number drops to around $400,000. Same effort, same intelligence, same strategy, just delayed action. And this is where psychology really matters. Women are often taught, explicitly or subtly, that money mistakes are dangerous. That one wrong move could ruin everything. So instead of taking small, controlled risks early, many women take massive risks later by staying out of the market entirely. Dollar cost averaging flips that script. It says, you don't need to be confident. You don't need to be sure. You just need to be consistent. Now you might be thinking, but what if the market crashes? Good. That's actually when dollar cost averaging works best. Because when prices fall, your fixed investment buys more shares. You're quietly accumulating assets at a discount without needing courage in the moment. Think of it like buying groceries. If prices drop, you don't panic. You think, oh great, I can get more for the same money. Dollar cost averaging trains your brain to see market drops the same way. Now let's talk about control. Because here's another thing most people don't realize. Dollar cost averaging gives you emotional control, even when the market feels chaotic. You control how much you invest, how often you invest, what you invest in. You do not try to control market timing, short-term news, other people's panic. And that separation alone reduces stress dramatically. According to a Vanguard study, disciplined investing behavior accounts for up to 3% of additional annual returns, not from smarter investments, but from better decision-making. That's psychology beating math. Now let me be very clear about something. Dollar cost averaging is not magic. It doesn't make you rich overnight. It doesn't protect you from every loss. What it does is protect you from yourself. And that's usually enough. Here's how to actually use it. You pick a realistic amount, something that doesn't make you anxious. Even $50 or $100 counts. You automate it. No reminders. No willpower. You invest in diversified, low-cost funds. Not hype. Not trends. Not hot tips. And then you let time pass. That's it. No constant checking. No emotional adjustments. No self-judgment. Because wealth isn't built by intensity. It's built by patience. If you've ever felt like investing was not for you, like you started too late, like you needed to know more first, I want you to hear this. You don't need confidence to start. Confidence comes after consistency. Dollar cost averaging is how you start building wealth quietly, steadily, and on your own terms. Not perfectly, just persistently. And over time, that changes everything. If this video helped you feel calmer about investing, hit like, subscribe to Women's Invest, and share it with another woman who needs to hear this. You're not behind. You're not bad with money. You're just one habit away from a very different future. And this is where it begins.